Well, hello YouTube, Louie here, and today I want to talk about something that we don't typically cover or talk about. And for those of us that are stacking silver and gold and maybe some other precious metals, what I want to explore is what other tangible assets might we be stacking? You know, the concept of the fiat monetary system exploding, certainly makes a lot of sense. But, often I think we believe there is only one solution to this to protect ourselves, that being silver and gold. But honestly, I think there are other solutions that we don't typically explore. And some of you out there, I know, are collectors, and some of you are stackers of things other than precious metals. And that's what I want to explore today. What are the major assets that people invest in to beat inflation? And, I think some of these things are for the rich and wealthy, but some can also be accumulated by people of modest means. So let's explore together what we might be stacking besides silver and gold. And as we do that, what has a better and worse return history compared to silver and gold, right? Because you want your assets to appreciate as quickly as possible, even when the world isn't coming to an end. So let's take a look at what might qualify. All right, here are some ideas I've had in no particular order. And I'm not going to cover prepping at the moment. However, you might make the argument that the most important thing you could stack are items that would prepare you for unrest and support and allow your family to survive in tough times. So I'm not going to cover stacking. I'm not going to cover prepping, whether that be guns, ammo, water purifiers, freeze-dried food, etc. I think you all know that that would be a good idea. What I want to cover are those things that will potentially preserve your wealth in uncertain economic times and even in moderately uncertain times like we're in right now, making the system go on much longer than many of us predicted. And frankly, we could be entirely wrong. I don't think so, and I know most of you don't think so, but, it could be that silver and gold are not the best investment in uncertain times. There could be other assets that would produce a superior return and would have more certainty, right? I mean, the problem with silver and gold is that the returns are erratic. That, they have pretty good returns over time, although not as good as the stock market. But those returns are erratic, and you could see long periods where they don't appreciate, and then periods where they rapidly appreciate, which gives you the opportunity to miss out on the move or stagnate in the position for way too long a period of time. So now I'm not selling any silver and I'm not selling any gold, but let's take a look at what other people invest in and get some ideas here how we might further diversify. Or not, and I hope we'll get your opinions too when we get to the end here. Okay, let's go ahead and jump right in. All right, top 9 assets for protection against inflation by Dan Moskowitz. This is done in May. Let's see, I'm not going to read you this, but he says he's cultivating ideas for asset classes that do well in inflationary climates. All right, let's go ahead and go. Now, he's got gold on the list. All right, that's cool. And he said that gold beats inflation 54% of the time, which is a surprisingly low percentage. I suppose he's taken the long-term approach to that. But we know about gold. Okay, let's go ahead and skip over gold. He's referencing commodities here. They can beat inflation. And there was certainly a period, at least 10 years ago, where the price of lumber and oil and other raw materials were just going through the roof. But again, I think that is also speculative and erratic. Stock bond portfolio, 60% stocks, 40% bonds. Okay, that advice is pretty old advice. And if you're buying bonds right now, you must be expecting rates to go to zero, because if rates go higher in an inflationary period, then you could lose money on long-term bonds. Okay, REITs and real estate. Real estate equity, real estate investment trusts also beat inflation 69% of the time. If you seek broad exposure to real estate to go along with a low expense ratio, consider the Vanguard REIT. Okay, REITs invest in, this REIT invests in real estate, obviously. Real estate has hung on by the skin of its teeth and actually continues to perform. So a word about real estate here. You know, some people will say real estate is a no-brainer. You need to get into it heavily. You need to enjoy the returns that real estate can bring, especially rental property. And other people, as I've been known to say, you know, in the past, will say avoid at all costs. You are in a period here where you could essentially lose half of your equity almost overnight. Why do I say that? Because it happened 10 years ago. Okay, that's indisputable. But what is definitely a factor is where you live. So if you are in a high-flying state where real estate has already appreciated to the moon, then I would caution you severely to get into real estate. However, if you are in a place where prices are still reasonable, you can buy a home without cleaning out your 401k, then I think that's a better investment. So I'm going to leave it at that. Tell me if you disagree with that. Are you out buying that $1 million flip, or, you know, that house that you're going to rent in San Francisco for $10,000 a month? I do not recommend that. There is also commercial property, and there are ways to invest in commercial property, and I think that is somewhat safer than residential in terms of returns. But that's about all I'm going to say about real estate. If housing is reasonable, go ahead and diversify into housing. I think many fortunes have been made in housing. But if it's a speculative bubble, as it is in many places, like where I live, be very cautious. Okay, the S&P 500. We won't cover the stock market, huh? We all know. Here is real estate income. Real estate income beats inflation 71% of the time. All right. It says consider market vectors, mortgage REIT, and income ETF. I don't know anything about that particular REIT, but that is a real estate income REIT. Worth considering. Probably would be better to buy that than jump into the S&P 500. Okay, more bond funds, leveraged loans. Leveraged loans outpace inflation 79% of the time. I know some of you do that. But better watch the collateral and make sure that you're in a primary position on the collateral. Let's see. Tips, Treasury, inflation protection. I'm not going to cover those. All right, let me wrap this up. This is one article. I'm going to get to many other classes here in a moment. The bottom line, we won't likely see rampant inflation for several years. I disagree. Therefore, these investments aren't necessarily prudent today. Okay, I also disagree. But keeping these asset classes on your watch list and then striking when you see inflation begin to take shape in real organic growth, in a real organic growth economy can help your portfolio. Okay, let's go on to the next item. Hold on one second. All right, another article I was able to find called "What are the safest tangible investments?" Oops, sorry about that. And he begins with gold. Okay, so we know about gold. Some safe collectibles. Now, here's the dirty word, collectibles, right? And I think more people have lost money on collectibles than have made money. But let's see what he has to say about this. People collect just about anything, but not all collectibles are safe investments. Some are, however, safer bets than others. Items like fine art, rare coins, wine, and stamps tend to hold their value or appreciate over time. I'm already disagreeing with part of this. The price of these tangible assets doesn't depend on economic conditions as much as prices for financial instruments like stocks and bonds. Collecting does take work. To choose a good investment, you need to learn about the things you buy. For example, if you want to buy art, you should be familiar with the artist's work so you can select a quality piece that may grow in value over time. Another thing to be aware of is that collectibles can be stolen and many are susceptible to damage. So you must safeguard them and care for them. The market for some collectibles may be affected by changing consumer tastes. I've learned that the hard way. The collector's items that may be all the rage this year may be passé next year, and prices can plummet. This happened with Beanie Babies in the late 90s, when their value soared to 50 times their retail price, followed quickly by a crash in demand and value. So, how many of you collect things? There are many, many things you can collect. We're going to have another article on this in a minute. But, do you collect fine art? Do you collect valuable wines? Are you interested in classic cars, etc.? Many, many things you could diversify your portfolio into. I take exception with stamps because I think the bottom has fallen out of the stamps market. I don't know anybody making money on stamps, but I could be wrong. Rare coins, I think, do well over time, but again, the market is in a bit of a slump for collector coins, so you'll have to tell me if you agree that rare coins, whether they be Morgans or something more exotic than that, are holding their value and appreciating. They did for years and years and years, but at the moment I have not researched that. Here's an argument for real estate again. You can't steal land. Real estate, whether it's land or developed property, is not something a thief can make off with. Plus, real estate tends to grow in value in the long run. These features mean real property can be a very safe, tangible asset. The downside is that real estate markets can turn sour and property values may fall. Unless you are able to ride out a market downturn, you could find yourself forced to sell a property at a loss. Owning real estate can be a lot of work, especially if it's a rental property. You'll have to manage it, find tenants, and pay maintenance costs and taxes, etc. With undeveloped land, you have to hope that appreciation in price of the land over time is greater than the property taxes you pay. All right, that was a good article. Let's go on to the next. All right, we're going to dive a little deeper into art. Investing in art may be a great idea if it's something you truly love, but can be risky, so you need to do your research. Art can do more than brighten a living space. The art market has become one of the hottest new investment crazes in recent years. Paintings and sculptures, collectors frequently buy pieces with an eye towards adding to their investment portfolio. But will art investment really earn you a profit? Or is this new asset class mostly hype? Art is a long-lasting investment. Profits from art won't happen overnight. Experts recommend art investments for patient investors with a time window of 10 years or more. The art market follows rules of its own. One major perk of art as an asset is that its value doesn't rise or decline with the stock market. Somewhat, but I think it does a little bit because I watched the bottom fall out of a lot of collectible items in the last recession. Even if your stocks aren't performing well, your art investment may be doing great. Good news for the savvy investor who wants to diversify a portfolio. But it's risky, and the art market has ups and downs like any other market. Since it's impossible to determine an artwork's true value, a lot depends on the artist's reputation and the economy as a whole. Now, I'm not going to read the rest of this, but if you want to invest in art, let's say that you think Picasso is pretty cool. There are actually there are associations or collectives that get together. and essentially you purchase a share of the item or items that they are investing in. I think there are multiple asset classes that you can do this with, property as well. All right, switching gears here. I'm going to have to go a little bit faster, I'm afraid, or this will be an hour video. So firearms. How many of you are invested in vintage or even modern firearms? Well, I think the thing to remember here is returns can be good in times of unrest, as well as periods with political uncertainty, as we saw, about a decade ago. And you also have to recognize that in the United States, the political attitude towards firearms is weakening, and legislation could definitely be passed to make that AK-47 worth a lot less than it is today. So I'll turn that issue over to you guys. I know a lot of you do invest in these items. So what are your experiences? Are you making a lot of money on guns? Are they holding their value? And I'm not talking about general preparedness and protection. I'm talking about investment. All right, here is one of my favorites that I wish I had pursued this hobby more fully. I do have a few classic guitars, but not very many. But returns on classic guitars, electric or acoustic, and all musical instruments of high quality, whether that be a Yamaha piano or a violin, etc. They've done pretty well over time. Matter of fact, they've done dramatically well when you compare, say, the 60s through the current time frame. So what are your thoughts on classic guitars? They definitely can do well. I think part of that is that the quality of some of the more recent instruments, even the name brand instruments, they've moved a lot of production to China, India, etc. And people are searching out these older instruments of all kinds to obtain a quality musical instrument. As well as some people just put them behind glass and wait for appreciation. The thing to remember here, though, is that when you go to sell something like that, if you bought, let's say, a $10,000 Fender Stratocaster, when you go to sell that, you're going to pay some pretty high commissions if you do it through heritage auctions. I recommend the site reverb.com for quality musical instruments, but I think you could do a lot worse than investing in musical instruments. What are your thoughts on that, guys? All right, now one of my favorites, the classic car market. And I have dabbled in that very, very lightly. But, this goes with many things. Could be comic books or, could be collector watches. The reality is that collector tastes change over time. And we have a major demographic shift happening, of course, in our country, which I won't go into. But, the things that were valuable and attractive to those who grew up in the 70s and 80s may not necessarily be attractive and valuable to the new generation. Okay, starting with collector cars, I see that market is stumbling quite a bit currently. And now you can blame that on Uber. You can blame that on millennials not having much disposable income, or the fact that the cost of housing and storage has gone through the roof. If you decide to buy 2 or 3 classic cars, where are you going to put them? And do you have a house or a garage big enough to mothball them? Many of these cars that are of higher value are not driven, which would not be my preference. I would want a car that could be driven personally. I think a lot of us would. But the value of these cars are dropping currently. I think the excitement with driving is dropping, and the cost of ownership is rising. So I'd be very careful with collector cars. However, if you've been waiting your whole life to buy that Shelby Mustang, I'll bet you could find a pretty good deal right now. And by the same token, comic books, it's very fickle. Now, I think the historic comic books, classic comic books, the Marvels and whatnot, they seem to have been a stable investment. And perhaps those returns have been good. But you could also be investing in comics that people do not resonate with anymore. And when something falls out of favor in our culture, the prices drop just dramatically. So I don't really know much about the current value of comics or watches, etc. But I would say be very wary of that if you're investing for the long term. And when you get to the end of that investment cycle, those people who would value those items are no longer buying them. So let's go ahead and move on. I found a cool little graph here. All right, I was able to find this on Economist magazine, and this is produced by Credit Suisse Global Investment. But it is showing the returns from 1900 to 2017 on a percentage basis for everything from global equities down to diamonds. And, this would be hard to predict, I think, for many of us. And again, that time frame, I think, is a little too long. I'm not sure what the 1900, the year 1900, how that would be a meaningful statistic to get a 100-year return on something. But for argument's sake, equities have outperformed. Apparently, wine is quite a good investment according to them. They say stamps have done pretty good, but I think those have taken a downturn lately as the hobby of stamp collecting is dying out. Here are musical instruments. Here is a violin as the fourth best returning item. Bonds, okay, we all know about bonds. Art would be the sixth best. And here we have platinum scoring above gold, almost double the returns. But again, I don't like this time frame. It's too long. Silver, they say, has not returned anything between 1900 and 2017. Again, this time frame is really whacked. And diamonds have lost money over a 100-year period. I really wanted to jump into diamonds a little more carefully here. Let me see if I can find something more current. Here's an article from the Wall Street Journal, Investing in Diamonds, the Clear-Cut Truth. I'm going to go to the returns. Between 1999 and 2010, white diamonds provided annualized real returns of 6.4%. Pretty good. Between 2003 and 2010, that was the go-go period there, they returned 10%, according to an upcoming study. Between 1999 and 2010, colorized diamonds annualized 2.9%. Okay, so over periods of time, there has been dramatic returns on diamonds. However, let's take a look at another article. All right, this is from Smart Asset. It says, although man's obsession with gold goes back hundreds or even thousands of years, diamonds are a relatively new one. Like any other gemstone, diamonds are valuable because they are rare and in high demand. Without the demand, though, they would be worthless. So why is it most American males must enter the prime of their lives spending thousands of dollars on a piece of carbon? Remarkable. Diamonds crystallize carbon. Every day people go to the grocery store. Okay, I'm going to skip that. At a time in most men's lives when they should be maxing out their retirement contributions or saving for houses, many feel forced to trade all that money for a diamond ring. Okay, let's keep going. Don't call it an investment. There's a common myth floating around there that a diamond ring is some type of investment. In the late 1800s, diamonds used to be pretty rare, but with the discovery of substantial diamond sources in the second half of the 20th century, diamonds became more and more abundant. They talk about De Beers monopolizing the market. That monopoly ended in 2001. Going on, like a car, a diamond is a depreciating asset since it loses a large portion of its value the second you buy it. Think about gold and silver. The market for them is very liquid and fungible since you can store coins and sell them anytime or even trade them. During that time frame, they appreciate and provide a hedge against inflation. That is not the case with diamonds. Have you ever tried to sell a diamond? Since generally there is a 100 to 200% markup on the retail price of a diamond, most stores won't even buy back diamonds from consumers for two reasons. The first is that since most retailers receive their diamonds from wholesalers, they don't need to pay for them until they're sold. So there's no point risking capital on customers' diamonds that may never be resold. The second reason that retailers don't want to make an insulting offer to a diamond consumer, since that would undermine the notion that a diamond is a good investment. One industry expert estimates that half-carat diamond ring, which might cost $2,000 at retail jewelry, could be sold back to a wholesaler for $600. Well, you know what? Let's go ahead and take a look at APMEX. I know that they sell diamonds. All right, now I was actually wrong. APMEX does not seem to sell them, or I couldn't find them on their website. Provident Metals does, though. It says diamonds, bullion investment. Oh, wait a minute. Buyback prices that make investing in diamonds crystal clear. Shop now. Buying physical diamonds at wholesale for investment purposes isn't the first thing that comes to mind when discussing these shiny stones. Diamonds are typically associated with jewelry, but when it comes to buying loose diamonds for investment, the standard response might be one of downright bewilderment. Never did I think that I could invest in physical diamonds like I do gold and silver. Lots of good comments here about diamonds. Let's see what they charge for them and if there is a buyback price. All right, I am looking for the diamonds on Provident's website, but you know what? They don't have any either. These are all out of stock. A 1 carat diamond, Certicard, 1 to 5 points. Okay, so these are loose diamonds, but it's interesting that APMEX and Provident are not selling them. Let me see if any of the other retailers, bullion retailers, are selling them. All right, I am over at JM Bullion, and you know what? They don't sell them either. So I'm not going to be able to offer any advice or information here. But for those of you that do invest in diamonds, I guess you would just have to be an expert to make sure that you were getting them at wholesale and able to resell them someday. But this is not looking so good to me at the moment. But it's a market I just don't understand. I thought perhaps our bullion retailers would be making a market in diamonds, but not sure where to go for that information. So there we have it. What are your thoughts? What do you collect? What have you made money on? What have you lost money on? Please post down below if you find any of these ideas interesting. For the most part, I find most of these ideas fairly concerning and scary. But perhaps there's a couple of things that you would like to experiment with. Perhaps there are some things that over time you're sure will gain value. Perhaps, it might be spirits. I don't know. There's so many things, tangible things, farm equipment, water filtration systems, solar power. What are your ideas here? I've gone on way, way too long, and I hope you can add to this conversation with your own experience and ideas. So until the next time, Louie signing out.